Thank you, Dave. Thanks everyone for attending today, and welcome to this August Festival of Traders. Promises to be a great event. You're going to hear a lot of great information today. And today, what I want to do is talk to you about 3 exit strategies that will actually change the way you trade. I truly believe this because we have students around the world that we've taught these exit strategies to, and they told us that they've really improved their trading tremendously and made them much more consistent. Now, the good news is that you'll be able to start actually applying these strategies as early as today if you'd like, because you're going to learn all the rules. You're going to learn exactly how to apply them. First of all, I'd like to start off by sharing a chart with you right here. Let's look at this older chart of FANG, F-A-N-G. Now, get used to this chart because we're going to use this throughout the entire presentation because I'm going to show you how easy it is to transfer these different strategies and exit methods along the same chart. Now, for example, let's say you're looking at this chart, you don't have any clear idea what it's going to do, but ultimately your method generates a buy signal right here. So you feel good about it and you say, okay, I'm going to take the signal. Maybe it's going to be a winner and I'm feeling good about this. And guess what? It is a winner. You have a really nice profit going into the next couple of weeks. But as with so many traders, especially beginning traders, they often think about where they enter, but they don't think about where they're going to get out. Especially with a profit, they think, well, if I get out too soon, it'll keep going higher. But if I wait too long, it'll go down. For example, if you had waited too long with this, look what would have happened. You would have turned a nice profit on paper into a rather large loss if you continue to hold on, which happens to so many traders. So what if I told you with a method I'll be teaching you today, you would have actually been able to exit right here at or near the very top of that rally and potentially captured upwards of 25 points. So you're going to learn the rules to this method, this particular method, and the other 2 that I'll be teaching you today with 3 exit strategies that I truly believe will change the way you trade. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to my presentations, I've been speaking with the Festival of Traders for a long time, but if you're new to my presentations, I've been trading now for nearly 5 decades, 48 years to be exact. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years, I was a specialist. Now, a specialist is not someone who's any more special than anyone else. But in the old days, before electronic trading, if you wanted to buy or sell a stock, let's say IBM, which was actually one of the stocks I made a market in, you would call your stockbroker. Your stockbroker would put you on hold, and he would call the floor broker on the exchange. The floor broker would take the order, buy 100 shares of IBM, excuse me, then he would walk up to the trader who specialized in making markets in IBM. And that's what I did. I made markets of roughly about 50 or 60 stocks. I made markets through the crash of '87 and the bull market that followed. I left the floor in the mid-90s to manage money and also to trade my own account. And about 15 years ago, I teamed up with Pro Trader Strategies and we formalized Specialist Trading. And we have one goal in mind. We're a little bit different from other companies that you may have become accustomed to, and that our only goal is simply to educate you. We are first and foremost market educators. We're not going to ever tell you what we think the market's going to do. We don't tell you what the best stock is to buy, what the best stock is to sell. We don't tell you what the best market is to trade or best time frame. That's up to you to decide. You see, it's our philosophy that good traders can only be achieved. You can only get to that point once you make your own trading decisions. Most traders take themselves out of the game and allow someone or something else to make their trading decisions for them. So our service is we provide you with sound fundamental education that stood the test of time so that you can make your own trading decisions. This is the only way, in our opinion, how one can become a consistent trader. Not just consistent for a couple of weeks or a couple of months, but hopefully for a couple of decades. And we've gone on to teach hundreds of students, thousands of students actually, in all countries of the world and in virtually every state in the United States, how to become consistent traders. And hopefully we'll be able to make you one as well. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to share a lot of performance results with you today looking at these 3 exit strategies, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Okay, now another way to get more education on a daily basis is to follow us on X, formerly known as Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG, abbreviation for specialist trading. Every day I post upwards of 5 to 7 different posts of snapshots of our signals that our methods have generated, also little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on X. Now, as I stated earlier, we are first and foremost an educational company. So you'll see in this presentation that my goal is not to force feed you signals, to tell you what I think the market's going to do or what to buy or sell. My goal is simply to be a good mentor, to teach you how to trade with the specialist edge. This is the same way I was taught some 48 years ago by my mentors on the floor of the exchange. And that is what I feel what has sustained me now, going on nearly 5 decades, and hopefully it will be able to do the same for you. Okay, with that stated, let's begin. And also, I'd like to take questions at the end. So I know we have a good crowd here today. If you have a question, kindly remember it or write it down. I promise I'll get to them. I will reserve the last 5 or 10 minutes for questions, okay? So if you have a question, write it down or remember it, and I promise I'll get to it at the very end. Okay, now today's theme focuses on something my mentors taught me when I was struggling, and they said, Steve, having an exit strategy can avoid unnecessary pain. Now we have a number of students that come to specialist trading and say, listen, I have a strategy, but it's not the strategy that's at fault, it's my exits. I don't have a great plan. Either I stay in too late and I give away a lot of my profit or turn a profit into a loss, or I get out too early and watch the thing keep going and going and going. So an exit strategy can help avoid a lot of this, especially the unnecessary pain of turning a nice trade into a loss, because we all know that that's the worst feeling in the world, right? More than just getting into a trade and automatically losing. What's worse than that is getting into a trade, seeing that you have a profit on paper, and then seeing that paper profit turn into a large loss. And then all of a sudden, you're no longer a day or an intermediate trader, you've just turned into a long-term investor, right? Because you're holding on to this position, hoping and praying that it will turn around. Well, we really believe that these 3 methods that I'll teach you today can help alleviate that pain. All right, now firstly, there are 2 main types of exits. I bet you didn't know that, right? They fall into 2 specific categories, and here are the categories. The first is a fixed exit, and the second is a dynamic exit. So what's the difference between these 2? Well, a fixed exit is exactly the way it says in its title. It's fixed. In other words, it stays there at a certain point, a numeric value. And usually with fixed exit methods, you know where your exit is even prior to entering to the trade. So let's say you want to buy, once again, 100 shares of NVIDIA. Well, if you have a fixed exit, you'll know where that exit is even before you enter and buy the NVIDIA. So a fixed exit stays where it is, usually based on a certain amount of money or points you want to make, and it stays at that point. Now, a dynamic exit is really the opposite. Dynamic means it's fluid. It goes with the ebb and flow of the market, meaning that you have no idea where this exit is in advance. So oftentimes, if you use a dynamic exit, you'll enter into a trade not knowing exactly where you're going to get out. Now, sure, if you have a stop placement, you'll know exactly where you get out if you have a loss, if the trade is wrong. But you won't know where to get out if you have a profit, because it's based on, as I said earlier, the ebb and flow of the market. So these are 2 entirely different ways of exiting. There's not one that's more better than the other. The only wrong thing is when you're using one, let's say a fixed exit, where it's out of sync with your character, where you don't like fixed exits. Let's say you want to be in sync with the market. Well, then you shouldn't apply a fixed exit, or vice versa. That's the only thing that's wrong or that's out of sync. So you have to study these 2 types of exits in advance and know exactly which one best suits your trading persona. Okay, so here's exit strategy number 1. And we call this method previous high, previous low. All right, let's look at who this technique is actually for. Well, it's for traders who like a fixed exit. If you want to know exactly where you're getting out even before you've entered the trade, well, this is a perfect method for you. All right, so let's go back to our chart here, FANG, F-A-N-G, all right? Now, as you can see, the stock is going up. You're not in this stock yet. You haven't done anything. But what do you see here? Let's say you are a student of candlestick patterns, and you have a bearish engulfing pattern. This is a reversal pattern telling you that most likely the market is going to reverse its upswing and go lower. So therefore, you say to yourself, oh, this is a big sign to go short, so I will sell this. But where are you going to get out? Well, as you see right here, you want to get out with a fixed exit at the previous low. So you just go back and see if you sold it, this is where most likely it would go. You see, the reason why we use this is because oftentimes price acts like a magnet going down. It's pulling down, the previous low is pulling it down to the previous low in this case. So let's see how it worked out. Not bad, right? In less than a week after you sold it, it went exactly to that previous low. So once again, it acts like a magnet pulling price down to that level. Now, it does not guarantee, and it does not mean that it's going to just go to that low and stop. Oftentimes it does, but it's not a guarantee. It's just telling you that most likely that's where it's going to be going. So if you want to exit, take a nice fixed exit, that's a good place to get out. Now, a lot of students say, gosh, Steve, this is great, but do I put it exactly at the previous low? Can I put it a little bit above, a little bit below? And the answer to all those questions is, it's up to you. Remember, our job is to point this out. It's up to you to decide through your research and through your practice and through your paper trading to see what fits best for you. Remember, our goal as a mentor is to provide you with this high probability techniques and methods. Your goal is to decide how you want to implement it in your trading plan. So you have a nice little profit there looking at this hypothetical sell here in FANG. And look what happened after that. Well, it did bounce off that previous low and it's starting to go back up. So let's say the very same strategy you're trading all of a sudden generated a buy signal. And you want to use the same exit strategy, the previous high, previous low. All right, so if you were to enter on the close here, where would the most previous high be? Well, it'd be right here, right? And remember, this will act as a magnet, pulling it up to this level. Now, it's not, once again, guaranteeing you that it's going to go right to that level and stop. It could get a little prior to that or a little before that level. It could go a little bit past it, or maybe perhaps even stop exactly on that number. It's up to you to decide how you want to apply it. So let's say you did enter into this long signal, and let's watch the trade unfold. In 1, 2, 3 days, price was pulled up to that previous high. So now you've exited. So you've got 2 nice trades under your belt. Now, as we said before, there is no guarantee that it stops. It's only a signal that it will most likely go to that previous high or previous low. And as you can see, look what happened the following week or two. It went even higher. Here's where a lot of our students, especially beginning students, say, hey, Steve, how come it didn't get me out at the high? How come it didn't get me out at the low? Remember, this is not designed to do that. This is just designed as a high probability area for price to be going. You can decide in advance if you want to apply it or not. Now, looking back in hindsight, let's say you had not taken this and said, I'm not going to get out here, and I'm glad I'm holding on to this. Well, how well would that have worked out if you continued to hold on to it and gave away all of your profit? So looking back in hindsight, this was a very acceptable place to exit. Okay, so let's review fixed exit number 1. If you are long, you will exit at the most recent short-term high. If you are short, you will exit at the most recent short-term low. It's that simple. Once again, these short-term highs and lows act as a magnet, pulling price to those levels. It's up to you to decide where you exactly want to be exiting. Okay, that was exit strategy number 1. Let's move on now to exit strategy number 2. We call this the 5-period simple moving average exit. And who exactly is this technique for? Well, it's for the opposite side of the coin. It's for traders who want a dynamic exit. Remember, a dynamic exit means that you will not have any idea where you'll be getting out with a profit once you enter into the trade, because you are letting the market decide for you where to get out. So therefore, that's the difference between a fixed exit. If you decide to use a dynamic exit, you have no idea where you're exiting. Okay, let's look at this once again. Let's look at that buy signal we had in FANG. Now, instead of using the previous high, we decide to apply a 5-period simple moving average. So how does this work? Okay, if we are long, we will only exit once price closes, not trades, but closes below that 5-period simple moving average. Now, this could happen on the very next bar, the very next day, or it could happen 2 months from now. That's why this is called a dynamic exit. We have no idea. Now, sure, you have a stop placement in place where if this all of a sudden goes straight down, you're going to get out somewhere around here or possibly here. But that's a stop, a protective stop. We're talking about getting out with a profit. We have no idea where we're getting out yet. So let's watch the trade unfold. Let's say we got long, and the next day, okay, it touched the 5-period, but we're still closing above, and we continue to go in our direction. Well, we have a nice profit on paper, and we're continuing to close above that 5-period moving average. So we're very happy right now. Now, remember, you're always free to exit wherever you want. If you say to yourself, wow, I've got a great profit, you don't have to wait for it to close below. You can exit whenever you want, even with using the strategy number 1, previous high. It's up to you. But if you're going to stick to the rules of this strategy, you are still in this trade. It's starting to go sideways a little bit. And now this is where students have a problem. They'll say, well, Steve, I exited here and then it closed higher. Remember, you exit when it closes below the 5-period simple moving average. Now, obviously, we opened below, but where did we close? We closed above. So this does not follow the rules of exiting yet. So remember, you have to study these rules and know exactly how to implement them. So we're still in the trade if you follow the rules correctly, and it's still closing above, even though we're just kind of going sideways. And it's good that you did not sell yet, because now we're making higher highs and higher closing highs. And now, ultimately, we start to sell off. Now, we have not closed below. We have a bad day here. We close near the lows, but we're not closing below that 5-period moving average until the next day. Now, look what happened. We closed below. So this is your trigger to exit, but you have 2 options. You have 2 options to exit. You can use exit A, plan A, meaning that you can sell at the market and just automatically get out. And that's okay, it's up to you. Remember, you're in charge, you decide. Or you can use a more conservative exit plan B, which means that you will only exit if we trade below, not close below, but trade below the low of this bar. You have 2 options: get out at the market or wait for it to trade below, because oftentimes if you get out at the market, it will go higher, and that's okay. Oftentimes you get out the market, it'll go much lower. Oftentimes, if you use plan B, if you wait for it to trade here, you'll get out and it'll continue to go higher, but many times it will even go lower. So it's up to you. You have to experiment, paper trade with this to see what best suits your trading persona. All right, so let's say we picked plan A. Well, that would have been a wise decision, because guess what? It not only went lower, it gapped lower. But if we used exit B, well, we would have exited on the opening, because once again, you're exiting once it trades below the low of this bar here. And you say to yourself, wow, I would have done better if I got out at exit plan A. But looking back in hindsight, it was a wise decision either way, because you got out with a nice gain. So do you see how this is different? You have no idea where you're exiting because the market is telling you when to get out. This is an entirely different way to trade, entirely different strategy. Now, is one better than the other? Once again, no. They're equally as good. It's up to you to decide, because the only thing that's wrong is when you're trading a fixed exit and it doesn't make you feel comfortable. You feel more comfortable with dynamic exit. Or you're using a dynamic exit and you don't feel comfortable with that. You'd rather use a fixed exit. This is where you have to do a little soul searching and figure out exactly what feels the best to you. Remember, our goal is to provide you with this information, work with you to help you decide, but ultimately you've got to decide how to trade. This, in our opinion, is the only way one becomes a consistent trader. Okay, let's review dynamic exit number 2. we have two different options. The first one is if you're long, you will exit at the market on the first price bar that closes below the 5-period simple moving average. And if you are short, you will exit at the market on the first price bar that closes above the 5-period simple moving average. Now that's option A. If you use option B and you're long, you will exit when price trades below the first price bar that closes below the 5-period simple moving average. And if you are short, you will exit when price trades above the first price bar to close above the 5-period simple moving average. I know it seems a little wordy, but watch this. As Dave said, this tape will be given to you in a recording fashion, so you'll be able to watch it as often as possible to really understand the dynamics behind this. Okay. Excuse me. This brings us to the third and final exit strategy, which is, I have to say, is our most popular exit strategy at Specialist Trading. This is something I use also myself. We call this range extensions. All right. So who exactly is this technique for? Well, this is for traders who want multiple fixed exits, and this gives them the ability to increase their risk-reward ratios. All right, so how exactly does this work? Let's look at our old friend Fang here again. All right, let's look at that buy signal that was generated. Now, how would we use range extensions as an exit? We're not going to use the previous high. We're not going to use the 5-period simple moving average. We're going to base this off of the range of the setup bar. Now, if you're not familiar with what a setup bar, this is a setup bar. If you have a strategy that generates arrows, or if you have a strategy, once all the requirements are met, all the rules have been met, all the requirements are met, and everything comes into place, that's usually called your setup bar or your signal bar. So what you want to do is, whatever strategy you're trading, the signal bar could be based off fundamental news, could be based off technical patterns, it could be based off the full moon. It makes no difference, but once all of the requirements are met, that is your setup or slash signal bar. And that's this one right here, usually above the green arrow. So what we want to do is measure the range of the signal bar from the extreme low, the bottom of the wick, to the very high of the wick, not the open to closed body, but the extreme high and the extreme low. This is 100% of the range. Now, let's just say this is 5 points. Let's just say it's 5 points, okay? All right, so what you want to do is find out the amount of points, and then you simply add that to the top of the signal bar. And this will give you the first range here. We call this 200%. And you will continue to add that from these levels here. Add another 5 points and add another 5 points until finally you get up to the 5th and 500% level, okay? All right, so how does this work? Well, once again, it goes back to what type of trader you are. If you're the type of trader that wants to get in and out quickly, you like to carry multiple positions, you don't want to hold on to one too long, you don't want to carry a lot of money overnight, well then most likely you would use the 200% exit level. You'd enter and use this and get out altogether. Let's say you're more of a swing trader, all right, an intermediate trader, and you want to get the intermediate move on the stock or the future or the currency pair, whatever you're trading, because this can be applied to any market, any time frame. Well, most likely you would use the third and the fourth level, 300 and 400%. Okay, it's up to you. Now, let's say you're the type of trader that wants to get the most bang for their buck. You really think the market you're trading is going to really have a big move. Well, then most likely you would use the 500% exit level. Here's the one thing we do suggest to all of our students, especially the beginning ones. If you're going to be using this method, we advise you to exit your position entirely at either the 400 or the 500, because it's usually around this area right here that the trend ends, or that you get some type of a pullback or a sell-off. So you want to take your profits before the trend changes. Remember, we saw that chart before where it just all of a sudden went down. Well, we want to be able to get out before all of a sudden the trend changes. So that's just the very basic way to trade this. Our students tell us they trade it multiple ways. For example, let's say they bought 400 shares of this. Well, maybe they'd sell 100 share at each level. Or maybe they would maybe sell a couple here, maybe one here, and maybe one here. It's up to you. Or a lot of our students even like to say, listen, when price gets up to the first level, I'll move my stop to unchanged where I entered. When it gets up to the next level, I'll move that stop up to the 200, and I'll just continue to track it until it gets up to the 5th and final level, and I'll just exit everything altogether. Remember, there are multiple ways. We teach this in the course, our courses, how to use this. It's up to you, though, to decide how. That's why a lot of our students like this, because it's so versatile, okay? All right, so let's say we went long, once again, off this buy signal, FANG, and we said we're going to get out at the 500% level because we really think this thing is going to move. So we're going to go for the gold here. We're going to place our limit to sell all of our shares right here. And we don't care about these levels. We're going to get out right here. Okay, so let's see how the trade unfolded. Well, in a couple of weeks, guess what? We exited right there with a potential 25-point gain. Okay, just using the standard range exit method. And look what happened after that. This is why, once again, we always advise our students, if you're going to be using this, either at the 400 or 500 level, please exit entirely everything. Or if you're planning on that, please move your stop up. So at least if it does change, you can capture some gains altogether, okay? This is used to help you increase your risk reward ratio, because let's say if you bought it somewhere around here, well, if you exited right here at the 200% level, well, that's a 1-to-1 risk reward ratio. In other words, you're making the exact amount you're risking. But if you exited here, you're making twice what your risk is, 3 times what your risk is, and a total of 4 times what your risk is. So you have the power to determine and decide what your risk reward ratio is prior to even entering into the trade. Okay, so let's review exit strategy number 3, a fixed exit. Remember, if you're long, what you want to do is measure the range of the setup bar or the signal bar. This is where all the requirements are met. This is where all the rules come into play, and you know that it's time to either buy or sell. So if you're long, well, then you'll measure the range and you'll measure the amount of points or pips if you're trading currency pairs, whatever the unit is, and then you'll add it to the bar's high. These are the range extension levels, and you'll just continue to add them to each level, okay? Now, if you're short, you just do the same thing, but the opposite way. Measure the range of the setup bar, but then now you'll subtract it from the bar's low, and you'll continue to subtract it, and these are the range extension exit levels, okay? So there you have it. 3 exit strategies that I really feel will change the way you trade. And now that you know them, you can actually start applying them as early as today. With the market just opening about an hour ago, you can start using them today. But I would really highly suggest that you study these first, see what works best for you, and then paper trade for a while to see which one you want to apply. Now, most of our traders only use one at a time, but you can feel free to use a couple of them, maybe all 3, not at the same time, but on different markets. You don't want to overlap them. You just want to use one at a time and then see what works best, or you can look at the specific market you're trading and see, well, this would be better with a dynamic exit, and this one would be better with a fixed exit. It's entirely up to you. Our goal is to provide you with these things I've accumulated in nearly 5 decades and work with you, and then let you decide what makes you feel the most comfortable. Now, a lot of our students say, Steve, I love this. This is great, but guess what? I haven't been trading long enough. I don't have a strategy to trade. Or even some students say, Steve, my strategy sucks. It's terrible. It doesn't even qualify to have any of these strategy methods come into play. Well, here's the good news. For attending today, we have a great special offer for all of you coming to the August Festival of Traders. We're going to offer you what we call our Secrets of a Stock Exchange Specialist training sessions. What this is 3 hours of trading techniques plus a full strategy. So you're going to get many more high probability trading edges, very similar to the ones I just shared with you right now, but they're entirely different. Remember, we're talking about 5 decades of things I've accumulated that you won't find anywhere else, because most of the things I've accumulated were from my trading days on the floor. I'll talk about which indicators not only to use, but especially which ones not to use. I'll go into detail about the difference between a system versus a strategy. I'll share with you what I believe is the #1 chart pattern that you should be applying and looking for in any method that you trade. Talk about being on the right side of the market and how it is so important, and how to actually know whether you're on the right side of the market. And remember, all of these high probability trading edges that I've accumulated can be applied to any market in any time frame. Doesn't matter if you trade crypto, doesn't matter if you trade intraday stocks or intraday futures, or if you trade currency pairs, it makes absolutely no difference. They can be easily transferred onto any market in any time frame. But here's the best thing about our Secrets of a Stock Exchange Specialist video seminar. You're going to get the complete rules to one of our most prominent pullback strategies. This is strategy number 1. Let me share with you exactly what strategy number 1 is. Now, this is a pullback method that's designed to buy at lower levels and designed to sell, by meaning sell going short, at higher ones. So let's look at some strategy 1 examples to show you how this works. Here's an older chart of PLTR. Okay, obviously it was going up, making higher highs, higher lows. And at this point, it looks like it broke that nice uptrend. So now most students would say, well, Steve, we're in a downtrend now. I guess I have to exit my long position, maybe look to go short. But according to the rules of strategy number 1, this was actually a buying opportunity. This was not a downtrend. This is what we call a pullback, or a small little sell-off in an overall uptrend. It's not a downtrend, and it generated 3 buy signals right at the low before the stock took off 35 points. Here's another example. This one was in the Australian dollar. Here's a daily chart. All right, the Australian dollar is going straight down, right? But at this point, guess what? Looks like it's starting to go up. In fact, a lot of people could say, well, it hit some type of support right there. Look, we have a bullish engulfing pattern. We're making higher highs now. So we've got to buy, right? Well, not really, because according to strategy number 1, this was not the beginning of an uptrend. This was a pullback, meaning that it was a short little bounce, but the overall trend is still down. And it generated a sell signal right here at the very high of this bar. And you could have sold it, and in the next month potentially captured 460 pips, close to $5,000. Here's a 4-hour chart of the Canadian dollar. Once again, this 4-hour chart is going higher, and all of a sudden, is this a downtrend? Nope, this is a pullback. We teach you how to identify it in the course, and look at the 3 signals that were generated here in the 4-hour Canadian dollar, where you could have potentially captured 300 pips or $3,000 in the next week, based potentially off of 1 unit. And lastly, we'll look at this chart here in, this is Innovative Industrial Properties. This was going down, straight down. As you can see, we had a bad close and then gap down. So obviously it's really got some selling pressure. But then maybe that guy in that chat room says, well, guess what? Looks like we've bottomed out. We're making higher lows, higher highs. So this is the beginning of an uptrend. Looks like we're going to fill this gap and maybe we'll go back and make new highs. This is why most students fail, because they're following outside sources. Remember, we teach you to make your own decisions, and based off of the high probability methods we teach, this is not an uptrend. This was a pullback, meaning that it's a bounce while the trend is still down. And look off the last 2 bars. It gave you 2 sell signals where you could have potentially captured 35 points in the downside in the next 2 weeks. Or if you were long, you could have saved yourself a 35-point loss. So this is one of our premier pullback methods. And a year from today, you will have wished you became a member of this course. It's jam-packed with that much information. Okay, so let's break it down. You're going to get the 3 hours of trading techniques. This is your video course, yours to keep for life. Comes complete with many more high probability edges, along with complete rules to strategy number 1. I just showed you a bunch of examples there, how consistent this method is. And remember, everything in this 3-hour video course can be easily transferred to any market and any time frame. This is so powerful with so many trading edges in the actual course. On the website, we usually have this course advertised for close to $1,000. That's the strategy number 1 course altogether included. Here's what we're going to do. For our August Festival of Traders, we're going to slash that price all the way down for a limited time, down to only $37. $37, think of it. You most likely, you and your friend or significant other couldn't go out to breakfast for less than $50 these days. But for less than that, for $37, this is getting upwards of close to 5 decades of information I've accumulated, yours to keep, along with the full-fledged rules to one of our premier pullback methods, strategy number 1. But remember, this is for a limited time only. It's not going to be around forever. So here's how to take advantage of it. contact my sister site, which is Pro Trader Strategies. They are in charge of all the discounts and the pricing. They'd be happy to give you more information if you like. You can give them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your order over the phone or answer any question you have about pricing. And if you'd like to go to the info page and the offer page, as you see on the bottom, that's the link at the very bottom. I think Dave may be posting that. That's not a live link, that's why. So that probably will be posted later on the chat box there, okay? Now, I think we have about 3 or 4 minutes for any questions. If you have any, please go, excuse me, to the question and answer box. I would be happy to answer them. Let me see here if there happen to be any. I open this up. Can I do exit strategy 2 and 3 in my trade station? Sure. I mean, you can apply this to any platform. It makes no difference. We have multiple students that apply TradeStation. It's entirely up to you. You can use it, but remember, this is not an automatic thing where it comes on the TradeStation where it's a download of the exit methods. This is something you have to actually just calculate on your own. But it's very simple after some time. Someone's asking, would this work on futures? Yes, it is. Yes, it does. Excuse me. I make no secret about this. My market of choice for trading is the futures market. In fact, I trade the E-mini S&P on a daily basis. And I had one trade this morning where I actually used the range extension, and I had a profitable trade using this on the E-mini futures. So yes, it makes absolutely no difference. All of our methods can be easily transferred onto any market and any time frame. So we have crypto traders using these exit methods. We have currency pair traders, and it makes no difference what platform you're using. But remember, these are things that you will have to calculate yourself, like the range extensions. But it's fairly easy. With some practice, it's very easy to apply and to do. Okay. Any more questions? What time frame do you trade with this? Well, remember, once again, that's not something I don't know if you came late, but we don't believe in telling people what the perfect time frame is. That's up to you to decide. We have students that say, Steve, this works great on hourly charts. This is amazing. And I have other students that say, Steve, this is the best on weekly time frames. Whereas someone else would say, no, this works fantastic on 4 hour. Now, they're not all right and they're not all wrong. But the main thing is you have to find what time frame works best for you, and then you decide, because these methods don't know what time frame they're looking at. They simply work all together. It's up to you to decide, okay? Yeah, that's okay if you were a little bit late, I understand. But our philosophy is we give you this high-level consistent methods, and we teach you what to work with, and then it's up to you to decide. We never tell students what the best time frame is. We never tell students what the best market is to trade. We never tell students what we think the market's going to do, because most of the time we don't. We just follow what our tools say. Now, the reason why we believe in this is just think of the industry. The entire industry is based on someone telling you, or a chat room or trade room, or some guy on TV saying what he thinks the market's going to do or what you should be doing. And if that works so well, then why do 80 to 85% of all traders fail? It's because you're taking yourself out of the game. So our philosophy is you have to decide for yourself, okay? With that stated, I think we've come just about to the end of the presentation. I just want to say, remember, if you have any questions, contact Pro Trader Strategies. Give them a call at area code 310-598-6677. They'd be happy to take your order over the phone. Remember, that's for a limited time only before the price goes up to nearly $1,000. So take advantage of this. That's a great deep discount because of our association with the Festival of Traders. We want to give these students an opportunity to become associated with us and become to learn and see how we really want to educate you and make you a consistent trader. So it's in our best interest to give you a really low priced offer so that you can see our good faith that we really want to teach you, okay?